The price of gold has gone up almost 40% in the past year alone. If you're put off by this high entry point, are there other safe havens you can consider? And how do these alternatives stack up? A safe haven asset is one that retains or even gains value during periods of economic downturn. So when things go south, the safe asset can go up. In the fixed income space, investors can consider government bonds as a possible safe haven.
If you think about the US interest rate, the short-term interest rate is going to come down. The long-term interest rate might remain anchored because of the fiscal concerns, etc. So if you're looking to invest into the fixed income world, the belly of the curve between 3 to 7 year horizon and high quality credit is where you can extract a lot of value in terms of your investments within the fixed income space. There are two risks. There is the interest rate risk and then there is the credit risk. On the interest rate risk standpoint, as bond prices, typically bond prices will come down as interest rate, rises. In this current environment, we are on a interest rate cutting cycle. Credit spreads can tend to widen when it comes to, again, a slowing economic backdrop or recessionary kind of environment. So that could be a risk if the economy does slow down to a fair degree. But otherwise, if you think about how to position your fixed income allocation, then I would be up in quality and on the short duration or mid duration side.
With the US dollar on a downturn, there's increasing interest in alternative safe haven currencies like the Japanese yen and the Swiss franc.
When it comes to market uncertainty and political turmoil, geopolitics, etc. and all, these investors dial back, right? So they take money back to the Japanese yen and invest more domestically. So that leads to the currency appreciation on the Japanese yen side. On the Swiss franc side, it is a politically neutral country. It has a strong economy as well. And then, if you think about the central bank, it is a much more evolved central bank. So all of those aspects combined makes the Swiss franc another go-to safe haven currency. There is short-term aspects that you need to take care of. When you are in these currencies purely on a speculative basis, then that's where it could be a bit tricky from an investor perspective.
Bitcoin is not a fiat currency, but like gold, it also lies outside the banking system. So despite high volatility, some investors see it as a safe haven.
Bitcoin, potentially, that's why it's doing well, because it's not attached to the financial system. It's not even controlled by any government out there. So by definition, the ultimate safe haven that's not attached to the financial system, it's gold and could be Bitcoin. Bitcoin and gold has low correlations to equities. So Bitcoin and gold doesn't move in line with financial assets, but Bitcoin has a really high volatility. So it has a really high market beta with equities. So every time you see the equity market has a huge spike or huge downturn, Bitcoin will tend to amplify that gain and also that losses. But gold historically has been able to hedge against severe market downturn.
I actually see Bitcoin more as a risk asset rather than a safe haven.
Another alternative that's recently opened up to retail investors is assets in private markets. They can add balance to a portfolio because these alternative assets do not always move in step with traditional markets.
Private markets has a low correlation to traditional public equity markets. And one of the key reasons why is that so is because private markets by nature are not listed. And certainly when it's not listed, you do not have the day-to-day gyration of your stock price to increase the volatility in your valuation. So that is one of the key reasons why some allocation to private markets may also lower the overall volatility in your whole investment portfolio.
While all the experts we spoke to agreed that gold was still the go-to safe haven asset, the precious metal does have some drawbacks.
Gold is the go-to asset class. However, it is not perfect, right? It does not give you any income, for example. It also can stagnate through periods of, say, stability or increasing interest rates. So then you could look beyond gold as well with other sources which could also provide you some avenue of safe haven or relative stability against, the more volatile parts of the market.
So very hard to say which one is the best safe haven, but at the end of the day, portfolio allocation is all about diversification. Just having one safe haven may not be enough to. So having some safe havens in fixed income, in gold, cryptocurrency maybe even as well, or even alternative assets such as private markets. I think as long as your eggs are in a few different baskets, you should be fine.